Bro, how'd you meet bro?
Bro, you gotta see it with an exclamation. Like, bro, like, how'd you meet bro?
Bro, I'm waiting for the after party.
What after party?
Bro, what do you mean?
I met bro through Paul at 20BC. And it was this weird energy where there's these people working feverishly, marketing like ideas on one side, and Roy going, oh my God, crazy.
In the comments section, the biggest question people had was, why would an investor put $15 million into this company?
People ask, like, how do you build conviction over time? It's over time, right? It's people is the first call where we just talk life to actually seeing him in person and seeing the effect that he has on other people and just seeing it translate into numbers, which I like. If you're building something, build it for the entire world. And ElevenLabs is an example where the initial market when it was pitched, it was people were like, oh, dubbing.
Yeah.
And one of the questions that we had was like, how big is dubbing market? Lovable has this quote, last piece of software, cheat on everything. What does that mean?
Bryan Kim, welcome to Sorcery.
Molly, thank you so much for having me.
Well, we have so much to cover today.
We do.
Obviously, we need to run through Cluely first.
Let's do it.
So, Bryan, what's up, bro?
How's it going, bro? We got to start with bro if we're talking Cluely.
Bro, how'd you meet bro?
And I think, bro, you got to see it with an exclamation, like, bro, like, how'd you meat, bro?
Bro, what do you mean?
I met bro through two tracks. I was reminded actually. Paul at 20BC.
Oh wow.
Had introduced me to this crazy Colombia kid.
Mm-hmm.
I have an email to prove it. And then one of my scouts and person who I really enjoy working with, Ali DeBow, who traffics in young founder community, sort of said, look, like you should, like, I'm very excited about Roy. And so I reached out. I was like, bro, we should talk. He goes, I don't want to talk. He initially says, sure. And then he changes his stance. I don't want to talk. I'm very early, like, don't want to talk with you. I don't want to talk with the kings of EC or the dens of capital. Let me just do my thing.
Conqueror of the universe.
Exactly.
Right,
so I sort of put on my charming face and say, look, we don't need to talk about fundraising. In fact, I promise we will not talk about it. Let's just you and I meet so that we build relationship and talk life. To that, he said yes. So that weekend or Friday, I forget when, but we get on and we have like a 30-minute chat. And he's like, I walk away thinking like, it's crazy. All right, this is going to be fun. And he goes through life story a little bit, like the origin story.
Mm-hmm.
Where'd you grow up? What did you do? It wasn't like, I'm building this and it's so exciting. It was more the origin and the coming of Roy Lee. And I thought that was really interesting. And so I learned that he had moved to SF a few weeks later. And, you know, when I was in SF, I just sort of made a point to say, can I come by? Which he said, yes. Just, bro, swing by. Everything's cool. So this actually might be the exact way he said it. And so I come by. And then I see a couple things. There is a, founder that is young founder that is very, well networked in Silicon Valley that is just hanging out. You just at the office or house or whatever it's called. And there's a engineer who just happened to stop by at the house because he saw it on, I think he saw it on Instagram and said, I was just very curious. I wanted to come talk to you. And it was this weird energy where there's these people working feverishly, marketing like ideas on one side and Roy going, oh my God, crazy. And you have like two really accomplished people just coming to talk to him. And I sort of walked away thinking there's something pretty special here. It's not sort of all the noise and jazz. There's actually something substantive here and people are reacting to that. The third visit, I think I came with steak because the second visit he was crushing a steak. There's nothing on it. There's
what
no
grade?
Can't tell. I might be from Costco steak would be good. I'm not sure, but I don't think he had anything on it. No salt, no anything, just steak.
Yeah.
And with Coke. And I thought, okay, this is weird, but fun. So I'm gonna come bring steak next time. I did, and he ended up showing some, metrics. Like, oh, like this is how we're growing, and there's a enterprise interest, and there's all these like revenue that they're generating, and that's when it clicked. Where people ask, like, how do you build conviction over time? It's over time, right? It's the first call where we just talk life to actually seeing him in person and seeing the effect that he has on other people. And And third was really just seeing it translate into numbers, which I like. So that's sort of when it came all together. And it's funny, we'll maybe talk about it later, but things are growing too fast right now, right? Everything is growing very, very rapidly. We're in the era of momentum. And as we see that, I have this new theory where you need to catch them at a certain time. We did a lot of work to understand where when things are inflecting, you probably have 2 to 3 weeks to catch it. And by catching it, I mean convincing the founder, doing the diligence, getting to a handshake. And that's really hard to do. One, if you didn't know them before, and two, like that's a very short time frame. And so that's when we moved into motion. And we sort of moved very quickly to get to an agreement with Roy before the launch videos and all the viral stunts as well.
Super impressive. I think one of the biggest questions a lot of people had in the comments section, which is always fun, was
that's where the internet lives.
That's where the internet lives.
It's the comment section.
And that's why X is so good. X is literally just the comment section.
It is.
So in the comment section, the biggest question people had was, what is he going to do with $15 million? And why would an investor put $15 million into this company? So what is he going to do with this money, and how'd you gain conviction for that?
Yeah, I think you probably asked this question to him as well. It's interesting. Venture is a little bit of triangulation art, right? It's not just, hey, like, tell me exactly what you need. I'll give you that X amount plus 20% for buffer, and here you go. Because sometimes that doesn't work for a fund like us. We do have some ownership requirement given the size of the fund and how big we need to believe the company becomes. And there's some triangulation of where that needs to work. So maybe the founder says, hey, like, I have a need for $30 million, but that risk profile doesn't work for us and we can only afford less amount. And the opposite can be true where, hey, maybe I just need 2, but maybe you want 5 because, the ownership requirement, everything sort of works. That would be the only way that worked for us. So part one, there's a little bit of triangulation there. Part two, I think if you think you met Roy and the internet has met Roy, he's a very ambitious founder. And for very ambitious founders, it's interesting, especially when growth is so quick, capital actually allows you to do certain things. And I'll give you one example would be actually lowering the hurdle for your product to be used in more of a free manner and turning a little bit more into freemium where there'll be a conversion, the people who convert will be retained, but you actually expand the product surface for people to try. And so that's one way to think about utilizing capital. The other ways to think about it is actually, I sort of wrote this piece, Momentum as a Moat. And, extra capital does give you ability to, and you need to sort of obviously work with founders who are thoughtful and have a very clear idea on how they want to use it, whether it's marketing or product building or hiring the best people. And I think that's exactly where it's being used, right? The 50 intern is kind of a joke, but also there's a bunch of top tier engineers that are knocking down the door. So part one, talent. And talent is one, expensive, but also there's a little bit of signal when funds like us come in where they say, okay, that's a good place to go. So one is talent, 2 is marketing, and 3 is building at the product. So that's sort of how I think about where the money's going to go.
They are particularly polarizing. With the polarization,
Really?
they've done, you wouldn't believe it,
No, I have
but
no idea.
They do pull some stunts. I love his framing on this and the shift of between different platforms. So what you see on Instagram and TikTok, their content wouldn't be polarizing.
Yeah.
But they found this kind of wedge on X where, people are like a little bit more excited by it. They're a little bit more provoked by it because they're not used to seeing it.
Yeah.
That's one thing. Like, that's the media scope.
Sure.
The question I asked him was, okay, so are you concerned about your professional risk with those?
Yeah.
And what you feel will be too risky for, your investors, you're institutionally backed. How do you think about those stunts with venture capital and raising money from an institution like a16z?
Yeah. So maybe we'll talk a little bit about how Roy thinks about it, which is, the difference between the tolerance, if you will, of the spiciness of the content, whether it's in Instagram, TikTok, or Twitter. And I think Twitter is probably a little bit more polarizing, or X is a little more polarizing, and people react with a lot more animation, if you will. So I think he sort of figured that zone pretty well. And that zone to me is probably pretty wide, right? It's not like this exact type of content will work and that type of content won't work. There's some range of content that will work, and he's sort of tiptoeing around those areas to figure out what works. And I think sort of you learn through experience a little bit there. So that's part one. I think two is, your question is, how do you think about sort of when it's institutionally backed? Like, what are some of these stunts? And I think the way I think about it is this. Ultimately, we want to back companies that become generational and become very, very large. And a lot of the origin story of companies can be questioned when looked back in from the history, or from sort of current looking back. Like Facebook started with Hard or Not. Snapchat's beginning at Stanford campus was, they had a very specific utilization element. And, I think a lot of these products, when you look back to the origin, there's questionable elements where, is that really the right, use case for it? And I think ultimately tech moves forward and people sort of adapt. So I think that's the second. Third is, where I'm most sensitive is on hiring and enterprise customers.
Okay.
So it's a lot less about, a16z backed it. Aren't you worried about the polarization? I'm a lot less worried about that, because, as you know, we, as one of my partners put it, we run into fires.
Yeah.
Right. We don't shy away from that. So that's okay. What I am more focused on is making sure the image and the brand and what he's building is aligned with the eventual goal, which is to sell the product and apply the product to mature use cases such as enterprise, and make sure we're able to hire people in a world, like people on the bleeding edge, that may or may not share the viewpoint of where Cluely stands today. And what is, like, how do we actually moderate for that? How do we actually make sure the more thoughtful message continues to bubble up, such that people can pierce through the noise and understand what we're trying to build?
Their media strategy, I think, encapsulates really well this current moment in time and how distribution is seeping out all over the internet, how consumer companies have to think about marketing, go to market. They kind of created a playbook and now it's being replicated. So it's like really high quality viral video launch, like different kinds of clips, getting lots of people around you, gathering a community, going through many different channels. How do you see the way in which companies, especially on the consumer side, need to go out today? You mentioned momentum as a moat. So how does that fit into this as well?
There's an element of the current discourse being around that, but ultimately I think what it is we're living in a slightly different era. So when I say momentum as a moat, I don't mean it necessarily that will always be the case.
Okay.
It's not at all. In fact, if you look back, all my writing and my stance on this is in the pre-AI era. I love products that are crafted with care. I love products that are super thoughtful. I love products that are retention first. In fact, I back BeReal with or without the growth curve because the retention was so high. And it's like, this product slaps. Like, I don't know if people are going to use it, but it's so good. And if people get hooked on it, they will use it. So I was in that camp. I sort of went through a little bit of a change in this period of AI. I believe there are a couple of my beliefs where I think AI is bigger than internet. And I think all the lessons that I learned in investing or thinking about product in the AI and mobile era may be dated, or maybe need slight modification. And the modification to me is, if I believed really thoughtful, crafted products over time with love and care was important, I think that's really hard to do right now. You can try to do it, but models come out every week. Like when you talk about Captions, they had like an amazing Mirage Studio model, and that week there's like at least 5 to 6 meaningful model updates and launches. So how do you actually craft something with care and like craft over longer time horizon when the underlying plate is shifting so quickly? So one of the reasons why I say momentum is a moat is we are in this weird primordial soup of AI where everything's bubbling and it's unclear and we don't really know. It's still super early. There's 7 billion devices and number of people using more than ChatGPT are probably pretty low. So we're still very early, which means that in order to break through the noise, in order to actually establish mind share, in order to actually start the flywheel going in terms of attracting the best people, applying the best tech, being able to sell your product with revenue so that you can continue that journey, requires momentum. And when I say momentum, I mean distribution as well as product velocity. If you don't have these, it's just really, really difficult to break through the noise. And therefore, momentum as a moat is, to me, is reflective of the current environment where I believe AI is huge and I believe we're so early.
It's a pretty powerful time we're in. I was just at Kirsten Green's Humans in the Loop Summit for Forerunner. She had a lot of really great speakers. Reid Hoffman was one of the first keynotes that they had. They had a nice
Was it AI Reid or actual Reid?
It was actual Reid.
Oh, okay.
Yeah, he had to confirm that ahead of time, but there is some gray area there. We're not entirely sure.
Yeah.
He was dialing in from Boston. So
I did see that. That's why I wasn't sure. Like, is that?
Could be.
Unclear.
But between him and Kirsten, what they were talking about was, with things evolving so fast, what's happening today is not going to be relevant in 3 months. What happened 3 months ago is already obsolete.
It's true.
Things are moving so fast. So capturing it now, like you mentioned, is so critical.
It gives you the right to fight another day and be relevant another day.
Yeah.
If you don't have it now, it's just harder to capture that. And that's a sentiment that I'm trying to capture, where I'm not trying to craft this narrative of nothing matters, the product doesn't matter, retention doesn't matter, let's just move. That's not what I'm saying. I'm saying, like, we're in a very specific time. And all the lessons that we had from the internet and mobile era may just be a little differently applied right now. And ultimately, you get to build the plane as it falls, or build a car or flight as it falls off the cliff. In order to do that, you need to move very, very quickly. And that's sort of the point.
One of the things that Roy said in the pod when we were talking about Brex and his spending habits on Brex was spend big, move big, make big moves.
Move fast, break things, spend big,
Are you worried about his spending?
If it was reckless, I would, right? But we know the product has good margin. He's said a couple times he's profitable. In that case, then, within, budget is the wrong word, within the right framework, keep going. And there are multiple people who ask, oh, how much did these like marketing antiques and like this launch video cost? Very oftentimes the cost is not that high. So it looks flashy, it looks very good. But I think that's also a skill.
Yuri Kim and Alfred Lin at Humans in the Loop were talking about going big. Alfred Lin especially said, you should be going for the whole world.
Absolutely.
There's 8 billion people here. Go big.
Yeah.
And think about the craziest product you can do and go after it, because what do you have to lose?
Absolutely.
Do you think that Cluely is doing that?
Yeah, I think so.
Yeah.
So cheat on everything is a very powerful message. It pisses people off. Look, it's a desktop. It's a translucent desktop assistant that helps you. And if I were on a Zoom with you, and let's say I didn't look up your background, I would use Cluely, and it'll show me translucently your background and the talking points and your things that you and I can connect on. That's just a good sales tactic. That's a way to connect with others better. So one, I think that use case is absolutely global. And let's take that to other, companies and ethos, right? I absolutely agree that if you're building something, build it for the entire world. And ElevenLabs is an example where the initial market, when it was pitched, it was people were like, oh, dubbing.
Yeah.
And one of the questions that we had was like, how big is dubbing market? Frankly, Molly, I don't know. But ask that question another way. Audio is one of the main medium of human interaction. When you automate and inject AI into all things audio, how big is that market? If you dismantle Tower of Babel and you can translate all things simultaneously, whoever you talk to, how big is that market? The answer is, I don't I don't know at all. Not because I think it's small, because I think it's infinite. Lovable has this quote, Levanton, when he says this, where it's a great tagline, last piece of software. What does that mean? I don't know. Well, maybe the product actually helps you create so many different products that it is the last piece of software. Cheat on everything. What does that mean in terms of getting an assistant that is timely and relevant to you at any given time? I don't know what the end market is. So I do think he's going after a very relevant and global market, and I'm excited to see what happens.
Love that. Sorcery is brought to you by Brex, the financial stack trusted by more than 30,000 companies, including 1 in 3 venture-backed startups in the US. Nearly 40% of startups fail because they run out of cash. Brex is literally built to help founders avoid that. Unlike traditional banks that let your money sit idle, chipping away at it with fees, Brex is designed to help you spend smarter and move faster. Their all-in-one solution combines checking, treasury, and FDIC protection into one powerful account. You can send and receive money globally at lightning speeds, get 20 times the standard FDIC coverage through their partner banks, and even high yield from day one. With same-day and even same-hour liquidity, access your funds anytime. Companies like Scale AI, DoorDash, ServiceTitan, Hims, Anthropic, Flexport, Robinhood, and Plaid trust and use Brex. Start today at brex.com/sorcery. That's BREX.com/sorcery. I want to get into your personal portfolio further. You are a legendary investor. You've invested in some huge names, especially in the consumer AI space. Talking about ElevenLabs, how did you first connect with them, and how did you gain conviction?
Another really, really fun story. I have a portfolio founder, Gaurav, from Captions. Actually, my first investment ever.
Okay.
And I trust him. He has a very strong technical acumen. He's an extremely strong product thinker. He calls me one day and says, BK, I got to get in touch with this company. And it's the best audio AI product out there. And mind you, we had been already really interested in audio AI. And he goes, I can't get in touch with the founder. One, can you please use your VC-ness to go reach out to the founder? Maybe he'll respond to you. Two, it is by far the best product that he has used. So that carries weight to me. So I'm intrigued. Let's dial back a month or 2 to 3 months. ChatGPT had launched. We're all very excited. It's a moment. It's a watershed moment. And then we had two school of thoughts. One is that, okay, mother model may win everything. Okay, that's one school of thought. ChatGPT is OpenAI is very important. Like maybe open source version of that's very important. The other school of thought would be there will be winners in each modality: image, video, 3D, world, audio. Let's go collect the infinity rings of all the winners in each of these modalities. So that was like second school of thought. I've always been very excited about audio, so we had met a bunch of companies in the space, and we hadn't made any sort of investment. And then that's when the Gaurav call happened. So we do a bunch of work, and we meet Matty, and we immediately sort of sense that guy is different. He's very thoughtful, and it's a very AI native team. He and his co-founders, childhood friends. He's like Piotr is technical, and so is Matty, but he also understands product and go to market. So we thought this was a great team. So the thing is, like, we already had made the decision. Like, this is it. We want to be part of it. And we asked the very important question. Matty, we love you. We'd love to work with you. Are we your first choice? And Matty demurs a little bit and goes, we like you. And so after our call with him, like, oh, great. Okay, we'll keep working on this, blah, blah. And then we hang up, immediately get on a debrief call. Jennifer, myself, just Seymour. We're like, we're losing. I don't know what's happening, but he did not say, I love you back. This is not good. And I got in an Uber. I packed over 2 minutes, and I got in an Uber, and I called my assistant and said, get me on a flight to London that is leaving in 90 minutes. It's like, I don't know if I can, but like, I don't care what you do. Please help me on it. So I ended up flying to London, sort of told Maddie, I'm like, I happen to be in London tomorrow. Let's chat. And we ended up getting to terms and an agreement in the next, in the 4 hours I was on the ground. And then I came back to join our offsite in Las Vegas. So that's the story of ElevenLabs. And I think that story highlights a couple things. One is like we were very excited about the modality and the teams that were building in it already.
Mm-hmm.
And two, I think when you're excited about something, I think conviction matters and showing up matters.
Yeah, between this and Cluely, it's clear like you have relentless focus on
Either
what
fly
you...
there or bring steak,
Yeah, you need to if someone's giving you the cold shoulder, you got to fight for it.
Absolutely. I think the bro actually talked about it. Bro, if you're like looping your assistant, you're not getting allocation.
No,
like, yeah, like I don't like we move.
Yeah, you set a really good standard.
I think the question is, look, if it's worth doing, it's our job. Like, what is a strong form of that conviction, and why dilly-dally?
Why dilly-dally?
Why dilly-dally?
You don't need to. Yeah. I love ElevenLabs.
It's incredible.
Thank you for funding them. I use it for things I'm not going to share because I don't want to release any secrets. But they're super, super great.
Yeah, and I think AI is changing everything. I'm extremely excited about ElevenLabs, and of course, the other angle we can go to is context. Right, AI gets 100 times better when you give it context.
Mm-hmm.
And one of my colleagues, Zach Cohen, actually said this, which was really interesting. Think about how much input you give Google and how much input you give ChatGPT. Google, I might say places to go in Japan. Okay, well, that's the input. ChatGPT, I might say, well, I'm going to go to Japan with my good friends, and it's going to be this length of time, and I have this type of travel budget, that type of taste. Like, can you come up with an itinerary? You just gave way more context to the thing.
Yeah.
And I think, one, that's powerful. And two, when you give context to it, the result you get back is 10x better. So that got me thinking on the, if we're talking consumer AI, like which areas can a consumer give context and get a 10x better result? And one of the areas that we thought about was health, which is why, in terms of physical health, we sort of made an investment in Function Health that sort of looks at your blood test and really over time overlays the AI doctor to tell you if you're doing well.
Function Health. I'm 18 years old, according to them. And because of that,
good for you.
Because of that, I posted that on Twitter. I posted on my newsletter, sold out all my referral links, had to get more, got some from the Function team, sold out all of their referral links. It was flying.
Yeah, it's a fantastic. We talk about it with, I talk about this with Jonathan, the founder, where let's become a morally criminal product not to buy.
Yeah.
Right? Like if it's cheap enough at some point, you're sort of looking around and, dinner table and somebody to go, oh, let's go watch Netflix. Netflix total over a year is probably what, like $200, $300. Mm-hmm. And let's say one of your neighbor, you heard a story that so-and-so got sick. It's morally criminal for the head of the household, whether it's the COO of the household, the moms or the dads, to say, look, like, let's make sure we're good in health. And let's spend $200, $300, $400, $500 a year to make sure we're good. How is that not a very reasonable, if not a morally compelling product to buy? Right.
And because their price point is so low, I'm a super fan, but because their price point is so low, they do democratize access to a form of health that no one has had access to before.
It's so expensive.
You don't need insurance to do it. You get a full blood panel. I'm selling them too hard right now.
But that's the thing. Like I grew up in Korea, mm-hmm. where I'm a strong believer that preventative is a way to go. That's a way to, like, it's too late to fixing it when by the time you're, mm-hmm. Going into a emergency room here in the US. So I'm a strong believer of that. And I remember distinctly, I was at Snapchat early on. I hired some of the best people that I know. I begged them to come work at Snap. One of them at 24 or 26, I forget. Only child, Harvard educated, extremely hardworking, incredible human. And she calls one day and says, I have a stage 4 cancer. My heart broke. I bawled that day.
Yeah.
But what that does is everyone around her rushed to hospitals and say, can you please check if I'm okay? Because you're scared for yourself too. And I distinctly remember hospitals saying, like, nope, you need a referral for this. You need like this to get some cancer testing. You need some other things to make sure that you can check your health. And I remember being very pissed off. And so, again, going back to the story of like origin story and why we backed Function is, I strongly believe part one, health needs to be taken back into consumers' hand. Two, once you have that result, you plop it into AI and it tells you how you're doing. Because frankly, if there are 130 biomarkers, I don't understand 129 of them. I don't get it. I don't know what these are. Mm-hmm. I genuinely don't. But I've gotten the result over 2 tests, and I put it in ChatGPT, and I ask, hey, am I doing better? Am I healthier or not healthier? Mm-hmm. It told me my BMI is higher. But other than that, every other blood biomarkers, I was doing a lot better. I didn't need to know what it is. I can drill down to any level that I want. And I think that's the power that AI will enable. And I'll have so much trust in that because I know that's actual data. It's trained on things. It's good.
I think to emphasize a couple points and bring this to the top, consumer AI is not just media. It's not just social media. No. It's not just advertising tools or creation. It exposes every personal like inch of our daily life.
Individual decision making, essentially.
Individual decision making, health, personal life, work, etc.
Absolutely.
What are some other areas that you've invested in consumer AI?
I've been very excited about creation. We go back to this era of AI, which I think is very, very early. And internet has that law, right? Like 99.1, where like 1% creates.
Yeah.
Think about the number of people who actually fluently use AI today. I would say that's less than 1% today. And my belief is there's a strong overlap between that early adopter curve and the creative energy. So what I am really excited about right now in this era of AI is especially as it relates to individual AI almost, is creative energy, creation tools. So Captions, Vigil, Civit.ai, and all these sort of Glyph, these are all the creative tools that I've invested because I'm very excited about that energy. And I think, that side is one. And I think over time, that creative energy flows into a little bit more professional side of things. So then you have like the Caption ElevenLabs. And, again, like I think Lovable is a great example there that's sort of channeling that creative energy in a more professional setting and seeing that. And I think we're at that stage. And ultimately, I think, I haven't watched a full Human in the Loop, but my guess is that there's strong belief that AI for general population, 7 billion devices out there, will become very popular and will become democratized. I can't wait for that to happen. And I think we're probably just 1 or 2 steps away from that.
What are the biggest risks with unleashing mass creation and automation of all of this? There are concerns about deepfakes. I don't know if you saw Mountainhead, but I brought this up with the Jack Altman podcast because Mountainhead kind of exposed like, oh, if we give everyone tools for this, there's going to be fake news everywhere. We're never going to know the difference. Roy would probably counter that and say, people know. People know it's fake or not. But where do you think the risk lies with these creation tools, and do you think it needs to be regulated?
So first and foremost, on people know, I think people know, but his people, what he means is young people know, internet native people know, mobile native folks know. There's a time like even go back, like 6 months, where if you look at Facebook posts, they're commenting heavily on AI generated, houses and like, oh, this is so beautiful. Like, how could you? There are a group of people that they may not know immediately, right? Like, so I give a lot of thought to that as well, right? Mm-hmm. So part one, I think there is a thing around people need to now think about, is this real, right? And ultimately, Photoshop is a good example of it, where and sci-fi visual effect is a good example of this, where before, people didn't think about that, and now it's a very, very common thing to Photoshop any pictures, have visual effects on any movies, and people accept that. So I think acceptance is going to be there. The discernment aspect, I think, will always be an aspect of humanity that we're gonna need to have, of like, we need to digest information for ourselves and choose what to believe. So I think that's going to be a continuous struggle, is the wrong word, but a continuous battle for people to understand what to accept as a belief system or not, and what to accept as a content as truth or not. And I think there is, insofar as I actually talk about one of these products where I believe Particle News went on stage, right?
They went on stage.
And then when you look at sort of the article that's written, they actually have the spectrum, right?
Mm-hmm.
Of like, this is a left-leaning article, this is a right-leaning article, and there's all these dots for these articles, and you kind of pick and choose what you're going to read, but you know where you're picking and choosing, you know your belief system, and you're subscribing to it.
Mm-hmm.
I think that level of disclosure is really good, right? You're telling people, look, there's all these different things, you pick and choose. I'm not going to moderate. I'm not going to say this is the truth, that's not the truth. Like, here's a spectrum of things, like, go make that decision. So I think that's a good example of what I think will be very useful for people in the future.
Do you think it needs to be regulated?
That's a good question. I think oftentimes regulation tends to be a little, what's the word that I'm looking for? Slower than the actual movement at the bleeding edge.
Okay.
And so it's almost trying to catch something when it's already moved away, and you now have this funky rule that, allows and disallows a bunch of things that may or may not be relevant depending on interpretation. So from that side, I think you're talking to an a16z team member who, where we believe in techno-optimism, and we believe that, advancement in technology can actually help people live better lives. And so I think my belief is that there are certain things that should never cross the line. And those, whether it's child protection or whatever, like we can have regulation for that and continue to have those. In terms of like, enabling companies and people to continue to build in this bleeding edge, I think any effort to curb that will probably not result in more innovation. It'll probably result in more gunk, if you will.
Right. So at Humans in the Loop, the whole purpose of that was kind of to emphasize and bring light. Hey, consumer has been around for a while. It's not changed. It's still here. We've also been in an environment where exits have been frozen. It's kind of picking up again. Where are you seeing trends in the exit environment and liquidity and growth and outcomes for this consumer sector?
Again, let's sort of think about this consumer sector as like individual set of things, like Notion's used by individuals and Figma is used by individual designs. And of course, like over time, it like gets into like team play, what have you. But all of those to me fall in the bucket of products that appeal to individuals who make decisions. And so from that standpoint, I think the exit environment is an interesting word, where I guess I am sort of more on the earlier stage side. So I'm shielded from needing to think about immediate exits, etc. What I am excited about is seeing how fast these are growing. So when I think about exit, so to speak, it's less about liquidity immediately and thinking about what size and what impact these companies are having, because that to me does loosely translate to exitability, if you will, whether it's M&A or IPO, what have you. So when I see companies that are going from 0 to 50, 0 to 100, 0 to 500 in run rate in a very short time, to me that says there's an incredible value that is being created. And market may or may not be efficient in the short term, but sure as hell, it will do the right thing in the long term. And I think there's an incredible amount of value being created right now. I'm very hopeful and excited about that. And so immediately as I think about exit, I think we're in the generation of seeing incredible companies being built that are creating a bunch of value. And I don't know when they'll exactly go out and gain liquidity, but I also think there's a little bit of a misnomer now in liquidity. Right, like IPO because it gives you tradable shares, it gives liquidity for early employees, etc. But now we're at a place where private companies are very large, have been staying private for a long time. They're secondary, they're tender offers, there are different ways of getting liquidity back as well. So I sort of look at this trend as larger companies have opportunities to continue to build and continue that momentum to grow into gigantic companies. And whether that's done in semi-private, it's a funny word, semi-private or public, I think that matters a little less right now.
Love premium merch just as much as we do. That's why Sorcery uses Fourth Wall. Everyone from creators like Marques Brownlee to podcasts like Acquired to orgs like the Smithsonian Institute are using Fourth Wall. They let you create and sell premium products without having to stress the details. They handle everything from production, shipping, customer support, taxes, even giveaways. When it's time to level up and make gear that people are actually proud to wear, that's when it's time to use Fourth Wall. And that's why we've trusted Fourth Wall for all of our brand wear at Sorcery since day one. Use my link in the description to get free credits for your first order. And for any VCs, DM me on X, and I can get all your portfolio companies set up with a free samples credit deal. Mark particularly talks about the barbell strategy or the barbell effect. You either have really, really small, either investors or ones that are huge. And the huge ones are betting on these ginormous outcomes, these $1 trillion outcomes. What do you think about that?
I think, we talked a little bit about it, but there is a thing around like we VCs are around because we also want to return capital for our LPs. And that equation or mathematics work differently for different size of funds. So, of course, if you're a larger fund, you're looking for decacorns, essentially, right? You're looking for very large outcomes, and you're sort of you're trying to find those founders, back those ideas. I do think there is a world where if you have a smaller fund, then finding a very nice exit of, X amount is actually a really good vehicle to return capital to your LPs and do what you love. So I think that's true. I think one of the things that's happening now is that you're seeing a bifurcation of what you need to appeal to the founders to win, because world-class founder nowadays have all the options. Dollar's green. You can work with a16z of the world, and you can work with an angel. Like, it's the same sort of dollar, if you will. And I think the way to appeal to a founder have changed. The whole idea around, I'll just sit around and schedule meetings and maybe tell you I'll invest or not. Like, I think that has changed a little bit. The best founders have all the options. And so large funds or not, you need to appeal to the founder. This is why you need to work with me. So it's less about the fund size to me and more about what value can you add to the founders. And if you work at places like a16z, we get to actually benefit from an incredible scale of operating partners who have incredible experiences that I don't have. I don't come with. I'm one person. I may not have the Rolodex of the entire firm. The CEO, the founder may not have that. We can come bear that, and that is a reason to work with us. And at the same time, whatever size you are, you may actually come with very distinct advantage that is helpful to the founder. And I think that's what funds need to, and investors need to think about these days.
And you have a ginormous media empire.
I like to think we help our companies distribute as well, and that is a benefit.
It's an amazing benefit.
Yeah,
it's amazing. Okay, so going back a little bit more, you talked about building a company now. You can escape velocity a lot faster, a lot quicker. I was at a Brex dinner a couple weeks ago. It was a CTO dinner, so this was more technical. We were going down to the infrastructure layer. There were different sized companies there. It was off the record, so I can't share too much. But the general thesis of this, or I guess the general takeaway from this conversation was pre-2024 companies are structured so differently than post-2024 companies. Post-2024 companies have an extreme advantage to scaling super fast, organizing their databases really well, using these AI agents and tools, using Cursor, using Copilots, that sort of thing, so that they don't have to worry about unjumbling this, like, as what Elon Musk would call, like, the US government, but like a ball of worms of an organization, but actually like go at speed and scale and then get to that $100 million in revenue much faster. How do you think about that? Are you seeing that as like a much more attractive way to invest into companies, look for those companies that have really clean infrastructure?
Maybe two things come to mind. One is that it's funny that sort of folks are delineating like 2024 and pre and post. I tend to think about like pre-ChatGPT moment or AI moment and post, and I think there's certainly a mindshare shift. And this is again why I have the momentum as a moat thing, where post AI you do get to build with smaller team perhaps, but I think you come with a mindset of I'm going to build fast, ship fast. And I think a lot of team had that thought prior to the AI moment, but it was slightly different time horizon, right? Mobile has been a platform that's been around for 2 decades. The biggest news is, iOS is going to actually come as this net new, products. And when you think about how to utilize those, and that was a product cycle essentially. And now we're in a new world where things are happening every week. So you do have to move fast. And I think that's the mindset shift versus, the size of a team or cleanliness of infrastructure. Second thought that comes to mind is there are so many companies that have been around that actually is taking advantage of the AI moment to get their second coming, if not more.
Mm-hmm.
Replit's been around for a while. And, it was like a tool to try to teach, middle school, high school kids coding. And if you think about the difference between what they built now and growing really well on and what they were before, it's pretty different. And same with Bolt. And so the idea that pre-2024 companies have this infra debt and it's so hard to unjumble and you can't innovate, you can't grow fast, I don't think that's true. What I do think is true is you need founders who are understanding of the technical advancement that's coming out. You don't need to be a researcher, but you do need to understand what's coming available from the model advancement and understand how that translates into your product or it's the scope that you're interested in. And folks who are able to do that and move fast, I think has just as much ability to succeed and grow extremely quickly now versus companies that are being built right now. So I guess I'm saying no. I think infra unjumbling is it's relevant to an extent, but I think there are many examples that sort of, goes against that.
Yeah. We're seeing, at least on the M&A side, thanks to new regulation and regulators that have left, that be an open door for advancing these later stage companies, these larger companies, and going after an acquisitive strategy for this.
Yeah, I suppose. I think I'm thinking more around companies that have been around that are moving very quickly, understanding what's becoming available and pivoting their way very quickly into net new product spaces.
So not just okay. So there's a couple different categories to which this can happen. Yeah. So it's those kinds of companies, and then it's also Meta, who is like going all gas, no brakes, acquiring things,
move fast and break things.
Yeah, move fast, break things, but also acquire like every brand name possible.
Right.
Do this huge scale AI deal, and try to rebuild their position against something like an OpenAI.
I think there's a way to actually attract talent. And I think one of the ways that I see Meta doing is they're attracting some of the best talent. Of course, it's very, there are multiple people who can build, application layer, but I still think at a research layer, there are a set number of people who are on the bleeding edge, who are setting the tone or setting the research agendas and moving the ball forward on the frontier. And having those folks in sort of four walls of your company, I do think is important, especially if you're aspiring to be one of the largest sort of AI company that is rebirthing yourself, if you will.
One of the things that I've seen recently with Cotu's East Meets West conference, it was fantastic. It was great. They highlighted OpenAI's usage, and now it's starting to eclipse, if not eclipse, social media. So we're seeing a shift towards knowledge as being one of the most, I guess, used tools or most attractive tools. How are you seeing this from all the categories that you cover? What will come next? What are you most excited about?
I think Harvard Business School did this, right? Like there's a famous article that I think one of my partners, David Haber, penned a long time ago. It's disaggregating like Craigslist. Mm-hmm. And I think Harvard Business Review came up with this like top use cases of AI, and it has like 40 different, use cases. And I think first was therapy, companion, and the list goes on. What I do see is for each of those lines, we're going to see incredible companies being built. And when we say, like for the first time, ChatGPT, OpenAI, Eclipse Social. I think I'm actually heartened by that. That probably means the creative energy, the curiosity, and productivity is outpacing some of the consumptive energy. And I think, again, that points to us being in a very early stage of AI. And there's a tremendous amount of creative energy that is currently being unleashed. And for those, again, for each of those line items, that sort of, again, I think it's Harvard Business Review that published like 30, 40 different use cases of ChatGPT. I think for each of those, we're going to see giant companies.
What's your favorite AI right now?
What's my favorite AI? That's a great question. Got a shell of companies. So like ElevenLabs, I love. I use it I use ElevenLabs Reader, 11 Reader every day, which is an easy way to just consume things. There are a lot of other tools that I like, of course, ChatGPT, what have you. And the creation side for these clips, you know, it's there are multiple tools that you can just put it in, dunk it in, and say, hey, give me the best clips. And then there are multiple tools that do that really, really well. So those are some of the tools that I really like using.
Love that. I'm obsessed with Opus.
Yep. We shall not name names, but there are multiple tools that are amazing.
Captions is cool too.
That's right.
I want to dig in more on the metric sides of things.
Sure.
So Brex is all about spending smarter, moving faster, performance. They like to track performance and growth, and they do this really well within their platform. Yeah. It's awesome. I use it. Everyone uses it. We love Brex. So does Cluely. When you're looking at companies at the earliest stages, what metrics are you looking to determine their success, and which ones are you looking for their growth?
Great question. So I did, I wouldn't say 180, but I changed.
Okay.
So again, like prior to 2024 or prior to 2023, my North Star metric was retention. And the whole question that I was trying to answer was, why do people use your product? And if you're answering that very effectively, the theory that I've learned hard way at Snapchat, helping build the growth team there, was that you will naturally see a very high retention. Theory back then was distribution. You can go viral on TikTok, you can go viral on Twitter, like you can do all these things, but retention was a thing that was really, really hard to get. Your product actually needed to be excellent and work. So I used to be very, very set in mind in terms of like there's a retention hurdle that I need all my product to meet, and I only get excited when you meet that metric. And of course, there's all other things that actually talk about retention. It's not just D30 retention. There's a what I would call illness curve, how many times people use your product in any given week, and there are all these other metrics that I look for. So that's prior. I still think that's important, and we'll get to that world. But right now, you ask, like, what metrics do I look at right now? I'm more of a Series A investor, or what I call traction seed or Series A investor. What that means is I want to look at some numbers. You telling me this is the idea is a kind of hard thing to invest on in my mind. Or there are multiple people who are good at that. It's just not me. I need numbers. So what I now look for is velocity. And what I look for in those are 2 to 3 things. Velocity in user growth or revenue. Nowadays, people are very willing to pay for tools, especially in this early age. So tools that are actually effectively monetizing and seeing the revenue grow quickly is very important to me, because that tells me not because we're making money, but because your product is actually useful and it deserves to exist and people are loving it. That's how I understand it. The other thing that I look for revenue now is the retention of the revenue, which is kind of interesting now. Like before, retention of the revenue mirrored very closely retention of the unique customer count. Because if you're selling it to individuals, if X churn, that revenue's gone. What is different now is because of AI, because you can introduce different tiers, you can introduce credit for overage usages, what have you, you actually see revenue retention being higher than unique user retention. That gap to me is interesting, because what that means is, for whatever reason, people are paying you more. Like whoever's left in your cohort, they are deciding to pay more. I don't know if that means they're upgrading their plan. I don't know if that means they're giving you more credit or buying more credit, but they're staying and they're paying more. That tells me your product's important to them. and to their workflow and what they're trying to achieve. So those two I look deeply. The third one is a little harder to exactly call it a metric. But what I do look at is product shipment velocity.
Oh yeah.
And I wouldn't say we completely standardize it, but there are a couple of memos that I've written with a team where we try to compare the product shipping velocity across all players in the same sort of space. And there's a theory there that I have, which is, again, if you're shipping product faster, there's just higher chance you're going to catch something.
Mm-hmm.
And shipping product faster, 10%, 20% each week, that shit compounds. Like, it's not just, oh, you ship product faster to 20% than the other, so therefore you're 20% better. No, if you ship 20% more in week one, you have 120% versus someone else 100. Based on the 120%, you're going to ship another 20% on top of that, and that just will compound. So the metric I look for is, how fast are you shipping? And that's the type of thing that I look for now.
That's amazing. I've noticed that as a theme too with some of the highest growth companies that we've had on the podcast too, like WAP. They are constantly shipping. They're constantly shipping code. They're constantly shipping new products. They're constantly tweaking them. Yeah. It's a complete iterative execution strategy.
It's incredible. Like there are companies that are literally announcing fairly large net new product every week or twice a week. And mine's blown. Like, how are you doing this?
Yeah. Which also helps our go-to-market strategy because you're always in the news.
Absolutely. Yeah. And that is what I mean by momentum is the moat, because it's not just distribution. That aided by actual product announcement and people seeing that and seeing it result in revenue and you building in public and talking about that revenue momentum. That's the whole game.
Positive.
Yeah, exactly.
Positive feedback loop.
And that continues. That's so hard to break.
Yeah, people just need to ship more.
And that makes it really also hard to catch them. If you're like a newer entrant or you're not a number one in mindshare, what have you, you better hope that the number one guy, dominant guy, is like slipping in velocity. Because if they don't, they just fly higher and higher and you're just looking at them. I'm like, how do I do that?
That's a good point. Also, if you know that there's a gap, you have a strategic advantage to go in and do something big.
Yep. You better ship twice as fast.
Yeah. I think like zooming out, something to kind of like push back on a little bit is within these bubbles, huge innovation cycles, there are two narratives. Well, there's a narrative that goes back and forth.
Okay.
It's a seesaw. You're either driving for growth or you're driving for profitability. In these different loops, when you're going up, and it's like a good positive macro environment, it's all about growth.
Right.
When times are tough, it's all about getting to profitability.
Interesting.
Right now, we're in the upside. We're all about growth. Things have switched back over. Do you think we're still in the early stages of this hype cycle, this innovation cycle? When do we start to worry about, okay, now it's time for profitability?
I sort of demur because I get your question where there's like a dichotomy of growth or profitability, and depending on macro cycle, there's, focus on either side. And I think you're right to say we're in sort of the growth trumps era. What I do want to say is that the current dynamic of the cost structure, especially for apps companies, really favor this equation of growth almost equals profitability. The margin structure of some of these companies that we're investors in is incredible. And I used to be a CFO. I look at their P&L and I'm like, this is a public company P&L.
Wow.
It is. So when you think about the profitability, the whole like SaaS of like 80% margin, like all of that, a lot of that still holds true. Even if it doesn't hold true, there are multiple ways that it is very easy is the wrong way, but easy to imagine margin expansion. Whether it's you over time take a bunch of queries in-house and start cutting costs that way. And we all know that compute cost is going down at a very rapid speed. So you get to actually, price it at a point where it may be a lower margin today, but it'll expand over time. So it's not to skirt your question, But I do think we're in this funny stage where some of the winners that are emerging have this like benefit of increasing profitability and growth and get to actually choose to reinvest that. There might come a time where it's more prudent to actually use those capital to invest in other things, and that may come, but I still think we're in the era of growth equals profitability to some extent, and the momentum in growth actually winning out.
That's a really good point. We're in a completely different environment. Companies are getting a lot more efficient.
Yeah.
Teams are getting smaller. Who's to say, like, yeah, people are shooting for that one employee unicorn.
Honestly, some of these, there, I think 6 months ago, Molly, if we sat down and you were like, oh, what are the interesting metrics? I might have said revenue per employee.
Mm-hmm.
I don't even know if that makes sense anymore. There's so many companies that are just, that's mind-boggling number that it's hard to compute.
Yeah. Okay, so also in Cotu's deck, there was a really great chart for AppLovin versus Microsoft.
Yeah.
AppLovin's revenue per employee is like a huge delta between Microsoft's. Microsoft's is kind of like flatlined a little bit, but like that is like a true trend we're seeing even in large private.
Even in large private.
Companies.
So imagine companies that are being built now is, the unjumbled infra, I suppose. And companies that get to actually think about their customer support a completely different way, think about sales and outbound motion completely differently. It's just it's mind-boggling what's possible now.
There are a couple critical questions that Kalshi suggests with these, and they have them in their markets.
Is Kalshi the one that have sorcery, or is it Polymarket?
It's Kalshi. We are only Kalshi in this household. It's Kalshi.
I had to ask.
We love Kalshi. $2 billion valuation now. They're killing
New York
it.
Company, eh?
They're crushing it.
Yeah,
they're right up the street too. Yeah. They're great. So they have two questions around this.
Okay.
One of them is, do you think there's going to be more, as like a secondary effect, do you think there's going to be more tech layoffs this year than in 2024?
Huh. So that's like one question?
Yeah.
Am I betting on this?
Yeah. Are you like, what do you want to put down?
I would actually bet that there would be less.
Okay.
I think the opportunity cost of not having the manpower to actually build and accelerate is too big. And while on like margins, they may be, maybe we can have less of X or Y. Overall, I think speed remains so important. Overall, I think building quickly remains so important that my belief now is that it's not the time to actually try to get to super efficient and take sort of the, foot off the gas a little bit, if that makes sense. So my bet is no.
Good. Okay. So one thing, it's not betting, it's trading.
Fantastic.
First federally regulated.
Excellent.
Yeah.
Good. Thank you for the correction. I stand corrected.
Okay, but good to know. Okay, so we're past the get fit era. We're now in speed, velocity, keep the gas on the pedal. Do you think, maybe you already answered this question then, do you think unemployment is going to drop by 2030?
2030.
Or is it going to increase?
I think that's like okay, I'm going to say I'm not the best person to answer because I actually don't know which sector has the highest large amount of employment, to be honest. And to say, employment writ large is going to change, not knowing what the biggest size of the pie is. It might be manufacturing. And if that's true, I'm like, I don't know.
Don't know.
I think my answer is don't know.
Okay. Valid. Fair. Okay, well,
I've learned to say don't know when I actually don't know the answers.
That's commendable. Some people wouldn't do that, so it's great you're being honest. As we wrap up, so I jumped the gun. I went a little bit too far. We usually end with these Kalshi predictions markets. But before we do that, I want to know what you're most looking forward to this year.
This year?
Yeah.
I am really looking forward to the first emergence is the wrong word, but the beginning of pure consumer AI products really breaking through. I think there are a couple of products. Like I would say ChatGPT has been the runaway winner in the consumer AI mindshare. And I'm very excited to see more popping through.
Exciting.
And we'll get very, very busy.
Very busy.
Very busy.
I thought like I would have more time in the day, but now I just have more jobs to do because I need things to do.
See, this is why I don't think unemployment goes up or layoff goes up, because there's more to do.
Yeah.
There's always more to do.
Somehow I have 5 jobs now.
You do have 5 jobs, and I probably will need to increase my job count as well.
You gotta increase that number.
Yeah.
Okay, so as we formally go into the Kalshi predictions market now,
Cool.
Let's do a couple Cluely ones.
All right.
One, do you think Roy will go to jail?
No.
Not even in a stunt?
No.
Okay. I kind of think it would be funny if he did a stunt.
Going to jail affects background checks, which affects next rounds of funding, which no.
Good compliant answer. Love that. Do you think he's going to become a billionaire?
Oh, okay. So I got to look at the cap table.
Do you think he can reach that?
I sure hope so.
This is what you're betting on,
I
as
sure
an investor.
Hope so. So, I guess my answer default is I bet with our wallet.
More Cluely. We got to make Roy a billionaire.
We do. Internet, please help.
Internet, please help.
Comment section, please help.
Okay. Going into consumer, what do you think the Jony Ive and OpenAI device will be?
My guess, it's an ambient device. I think it'll be closer to AirPods of the world than glasses. Like I need glasses. I'm -8, -7.
I don't know what that means.
It means that I'm blind without contacts.
Okay.
Sorry. I still don't wear glasses. Like it's the form factor. I think it's not necessarily for everyone. So then I need to think about what form factor can be ambient on people all the time. Accessories have personalized taste. It's kind of hard. I like your necklace, but I can't wear that. So I think it needs to be a form factor that makes sense to be ambient. And my guess right now is probably AirPods-esque, but who knows? Who's to say?
Who is to say?
Who's to say?
AirPods do make up a large portion of Apple's revenue.
I think it's one of the best hardware products that got launched that people don't talk about. It's an incredible product.
It really is. Yeah. They're great. They, you drop them, they fly all over the place.
Phenomenal.
They're gone.
They're gone. You got to replace it. You got to buy it immediately.
It's like they almost have some sort of ergonomic factor inside of
bounce
them
away
to bounce as far as possible.
I think that's right.
Incredible design.
I have 3 of those.
You do?
Yeah, you just gotta. You don't know if you're gonna lose one.
Do you keep them one on the charger at all times?
Yeah, I do.
You
do.
do?
Yeah,
okay.
I do. Gotta. You always have a full one. Because without it, I don't answer phone calls.
Okay. Neither do I. I don't know how to pick up a phone anymore.
Yeah, it's a button, but I don't really know how to do that.
I love that. That's a good one. I could totally see that.
Pins, it's funny.
Are we past pins?
I don't know if we're past pins, but there's a very funny, it's not a social experiment, but in my mind, it was an A/B test where we had a consumer AI event in New York. Same day, there was a consumer AI event that one of my partners did in SF. And then in SF, some portion of people came with pins and recording the whole thing, ambiently there, blah, blah, blah. I don't think you can get away with that in New York. 0 chance.
Too much noise?
No, what I mean is just it's just cringe.
It's
you can't come to an event with a pin that's recording.
No one would want to talk to you.
No, so it's just a very interesting social test of what's ready, and of course, Robotaxis or Waymo really started in San Francisco, and it's now going everywhere. So maybe that's the start of it. So I'll never rule anything out, but socially, right now, I think there are probably other form factors that make a little more sense.
Interesting. Okay. Yeah. On the Waymo part, Waymo is coming to New York.
It's hard to believe.
I hope they're treated well.
I hope they're treated well as well. I say thank you every time I get off.
You have to.
Yeah. I say hello, thank you. I'm very polite.
How's your day?
How's your day? How are you feeling? It's important. In case they're listening.
They are listening.
They are listening.
They're listening and they're watching.
In case there's a pure, highest form of AGI, what's the downside of being nice to them or having them know that you have been always nice to them?
You also want to train them to be nice.
Exactly.
It's like having good friends. When you have good friends, it rubs off on you.
This is exactly, yeah.
If you're good
right.
to the robot
They'll
will
be good to
be
you.
good to you.
Exactly. I'm excited for it to come to New York. Well, we'll see how that does.
I know they're gonna be hardcore.
Yeah, we'll see how they weave through all the honking and the bikes.
In LA, that's where I'm from. They're not treated well at all.
Is that right?
I mean, they just set them all on fire. They had to send them home essentially.
Their home is SF.
I think so.
They're treated nicely in SF, I believe.
They're treated really nicely.
Yeah. We're kind to them.
How many cities do you think they're gonna be able to scale to this year? Like, how many more cities? What cities? Yeah.
3 more.
3.
Yeah.
Which one?
I mean, cities. It's so funny. Like we live in the U.S., right? So cities. I'm like, oh, like what state and what cities? Like people forget. I don't know. I need to verify this as a fact. But somebody once said, if you had LA and New York as a market, consumer wise, that is bigger than continental Europe.
Yeah.
So that's 2 cities.
Yeah.
That's bigger than continental Europe. Like, so we were saying, oh, maybe 3 cities, whatever. But that's huge. That's huge.
It's pretty big.
That's how I think about it. I'm from Korea. It's a tiny, tiny place. Like California is 4 times larger than Korea. So I sort of think about that. I'm like, I don't know. Like 3 cities can be 10 countries. More.
That's a really good perspective. That's a good point.
We live in a big place. There's a lot of consumers. There's a lot of money. There's great opportunities to build here. It's great.
It's great.
It's time to build.
It's time to build. That's a great way
to
end it.
And
this
is the end there.
It's time to build
End note.
The next Cluely.
There we go.
Thank you so much.
Thank you, Molly.
This was a lot of fun.
This was great. Thank you.
Bro.
Hey, it's Molly. If you enjoy our interviews, check out our newsletter, sorcery.vc, where we deliver a once-a-week top deals and tech headlines email, and also go deeper on our podcast interviews. Subscribe to Sorcery today. And don't forget to subscribe to the podcast on YouTube, Spotify, Apple, or wherever you listen. Link in description to sign up.